All right, deep divers, buckle up, because today
Buckle up.
we are diving headfirst into the wild world of forex,
Yeah.
specifically how to read the footprints of the big dogs,
The big institutions.
the institutions in the ever-shifting sands of currency pairs.
Absolutely.
Ever feel like the EUR-JPY pair is
EUR-JPY?
playing hide and seek with your trading strategy?
Oh, yeah?
You are not alone.
Nope.
Even seasoned traders will tell you
Yeah.
this pair can be a real head-scratcher.
It could be a head-scratcher.
But what if I told you there's a way to decode its movements,
Okay.
to anticipate its next move?
What's fascinating here is that even with its reputation for being so volatile,
Right.
the EUR-JPY still leaves clues.
Okay.
It's like a poker game. You just need to know how to read the tells.
Okay.
And in this case, those tells come in the form of institutional order flow.
Okay, let's unpack this.
Okay.
For those who are new to the game,
Yes.
explain what institutional order flow actually means.
Imagine trying to track a herd of elephants through a jungle.
Okay.
You might not see them directly,
Right.
but you can see the trail they leave behind,
Yeah.
the broken branches, the footprints.
Back to stretching.
Institutional order flow is like that. It's about understanding the impact these big financial players have on the market, even if we can't see their orders directly.
So it's less about predicting the future and more about understanding the forces that are shaping it, right?
Exactly. And one of the best ways to do this is to look for patterns in the market's movements, just like our trader does with the EUR-JPY.
Okay.
He starts by analyzing the daily chart, getting a bird's-eye view of the action.
And that's where those swing highs and swing lows come in, right?
Yes.
Now, I know our listeners are a savvy bunch. So
Yeah.
we don't need a basic definition here.
Right.
But what's important is understanding how these swings can act as signposts, right?
Absolutely. Think of them as the natural rhythm of the market.
Okay.
The key is to identify those swings that are significant,
Right.
the ones that might hint at a potential trend reversal.
And it's within those larger swings that the real opportunities start to emerge.
Yeah.
But here's where it gets really interesting. Our trader doesn't just stare at the daily chart all day.
Right.
He zooms in, focusing on a specific time window, the New York session,
Okay.
particularly between 7:00 a.m. and 10:00 a.m. Eastern Time.
Eastern Standard Time.
He even has a pretty intense name for it.
Yeah.
What's he called? New York Kill Zone.
The kill zone.
It might sound dramatic,
It does.
but it highlights the sheer importance of this time for forex trading.
For sure.
This is when the New York and London markets overlap,
Yeah, they overlap.
creating a perfect storm of trading activity.
A perfect storm.
So it's like rush hour for forex.
Yes.
High volume, fast paced, where the big players come out to play.
Absolutely.
But why is it so crucial for traders like us?
Yeah.
What's the advantage of focusing on this specific window?
It's all about opportunity and risk.
Okay.
Think of it like this.
Yeah.
During the New York kill zone, the market is like a river in flood.
Whoa. Okay.
You've got more volume, which means more potential for big moves,
Right.
but also more turbulence.
Yeah.
It's not for the faint of heart.
Meh.
But if you know what you're doing, the rewards can be significant.
Okay. I'm starting to see why he calls it the kill zone.
Yeah.
But let's be honest. Staring at a chart all day, even during the kill zone,
Right.
can feel like watching paint dry.
Yeah.
How does our trader actually pinpoint those entry and exit points?
He uses a really interesting top-down approach.
Okay.
Remember those swing highs and lows we talked about?
Yeah.
He starts there
Okay.
on the daily chart to get a sense of the overall trend.
So big picture.
Yeah. Then he zooms in,
Okay.
first to the 15-minute chart,
Okay.
and finally to the 5-minute chart.
So it's like he's a detective.
Yeah.
Looking for clues.
Yeah.
First, he surveys the crime scene.
Right.
Then he starts looking for fingerprints.
Because
So
of-
what exactly is he searching for on their shorter time frames?
He's on the hunt for what are called fair value gaps.
Oh, okay.
Now, these aren't just any old gaps on a chart.
Right.
A fair value gap represents a price void, an area where the market hasn't traded recently.
I see.
It's like finding a missing piece in a jigsaw puzzle.
Okay.
It suggests an imbalance between supply and demand.
And these imbalances, these
Yeah.
fair value gaps, they can be like little explosions waiting to happen, right? The
They
market
are.
wants to fill that void.
Yeah.
And that can create some pretty explosive moves.
And our trader gives a perfect example.
Okay.
From February 10th, 2022,
Okay.
the EUR-JPY made a significant jump during the New York kill zone.
Wow.
And guess what?
What?
That move was preceded by a fair value gap on the 5-minute chart.
Wow. It's one thing to understand the theory, but to see it play out in real time.
Right.
That's what makes this so powerful.
Yeah,
But I have to ask, spotting those gaps is only half the battle.
it's true.
Once you're in a trade, how do you know when to take profits?
Yeah, that's the question, isn't it?
Right.
Where do you even set your targets, especially with a pair as unpredictable as the EUR-JPY?
That's the million-dollar question, right?
That's the million-dollar question.
And our trader admits it's not always easy, especially without a clear trading range.
No, it's not.
But that's where experience and having the right tools come into play.
For sure.
And one of those tools he mentions is Fibonacci retracements, right?
Yes, using Fibonacci.
Now, I'll admit, whenever I hear Fibonacci, my brain goes straight to those spiral shells and flower petals.
Yeah.
It's pretty mind-blowing how this sequence shows up everywhere in nature.
Yeah, the golden ratio.
Yeah.
It is remarkable, isn't it?
It really is.
And here's the thing. It also applies to the financial markets.
Really?
Traders use Fibonacci ratios, like 38.2%, 50%,
Right.
and 61.8%
Okay.
to identify potential areas where the price might reverse or stall.
So it's like those Fibonacci levels act as magnets for the price,
Yeah.
pulling it back towards them after a big move.
That's a great way to think about it.
Okay.
And in the source material, the trader uses these retracement levels to estimate a potential profit target for his EUR/JPY trade.
Okay, so he actually uses it.
He does.
Interesting.
But he makes a crucial point.
What's that?
Fibonacci is just one tool among many.
Right. It's not a magic bullet.
Right.
It's about having a whole arsenal of strategies and understanding when to deploy them.
100%.
But hold on a second. We've been so focused on the EUR-JPY pair as a whole.
Yeah, we have.
We haven't even talked about the individual currencies themselves.
Well, that's a great point.
Right.
You're absolutely right. We can't forget about that.
Yeah.
A currency pair is like a dance duo.
Okay.
You need to understand how each partner moves individually to appreciate the dance as a whole.
I like that.
Right.
So how do we assess the individual strength or weakness of the euro and the yen?
Good question.
Are we talking economic calendars, central bank announcements, that sort of thing?
You got it.
Okay.
Economic data, central bank policy, even geopolitical events
Right.
can all impact a currency's strength.
So it's a lot to keep track of. But fundamentally, it's about understanding the balance of power.
Right.
Is the euro looking strong against other major currencies?
Exactly.
Is the yen showing weakness?
Yep.
Answering those questions can give you a major edge when trading the EUR-JPY.
100%.
It's like having that extra layer of intel, right?
Yeah.
Knowing whether the euro is leading the dance or the yen is dragging its feet.
Exactly. And when you combine that understanding with the technical analysis we've discussed,
Yeah.
well, that's when you start seeing the matrix, my friend.
All right, I'm loving the matrix analogy.
Right.
But for our listeners who are still finding their footing in forex,
Okay.
let's bring this all together.
Yes.
We've covered a ton of ground today.
We have.
Institutional order flow,
Yeah.
those crucial swing highs and lows,
Right.
the adrenaline rush of the New York kill zone,
The kill zone.
and even those mysterious Fibonacci levels. If you had to distill it all down to one golden nugget of wisdom, what would it be?
I'd say it's this, even in a market as seemingly chaotic as forex,
Okay.
where currencies are bouncing around like ping pong balls.
Right.
There's an underlying order, a logic to the madness.
Okay.
And the key to unlocking that logic is understanding the footprints of the institutions.
It's like we're learning to speak their language.
Yes.
To see the market through their eyes.
Exactly. It's not about predicting the future with absolute certainty,
Right.
but it's about tilting the odds in your favor.
And we do that by mastering the tools of the trade.
Right.
We've talked about using technical analysis,
Yeah.
like Fibonacci retracements,
Sure.
to identify those high probability entry and exit points.
Absolutely.
We've talked about the importance of focusing on those key trading sessions, like the New York kill zone, where the action is hot and heavy.
For sure.
And we've talked about the importance of always looking at the bigger picture,
Yes.
understanding the fundamental factors driving each currency's strength or weakness.
It's about putting all the pieces of the puzzle together.
Absolutely. Because at the end of the day, it's not just about mastering the mechanics of forex trading.
Right.
It's about cultivating a trader's mindset,
Right.
one that's disciplined, adaptable, and always hungry for more knowledge.
Now you're speaking my language.
Yeah.
Continuous learning.
Right.
That's the name of the game.
Couldn't agree more.
Mm.
Well, folks, we've reached the end of our deep dive. But before we go, I want to leave you with something to ponder.
Okay.
Today, we explored how to read the footprints of institutional order flow in the forex market.
Right.
But here's the thing. These principles, these tools of observation and analysis, they're not limited to currencies.
Interesting.
Imagine applying them to the stock market, to commodities,
Oh, well, yeah.
to any market where big players roam.
Right.
What hidden patterns might you uncover?
Yeah.
What opportunities might reveal themselves? Keep those questions in mind, deep divers, because they might just lead you to your next big aha moment.
Love that.
Until next time, happy trading.